All right, today we're going to play doctor, but for a company. We're putting on the white coats to give a business a complete health checkup. We'll be using the exact same diagnostic tools that top consultants use to figure out what makes a company tick or what makes it sick. So let's scrub in. You've seen this happen, right? A company seems like it's crushing it, they're everywhere, and then suddenly you're reading headlines about its collapse. On the outside, everything looked fine, but you just know something must have been seriously wrong internally. So the big question is, how do you spot that illness before it's too late?
Well, the answer is a business analysis framework. Now, just think of this as the ultimate medical toolkit for a company. It's a systematic way to look at every single part of the business, from its big picture dreams down to its daily grind, to find those hidden symptoms and really diagnose the root of the problem.
So here's our game plan for the checkup. We're going to look at 4 key areas before we make our final diagnosis. First, we'll examine the company's mind, its vision and strategy. Then we'll do a full physical on its business operations. After that, we'll test its muscles, its core competencies. And finally, we'll run the blood work by reading the financial vitals. First things first, vision and strategy. You gotta start with the company's mind, its soul. Is its thinking clear? Does it even have a purpose? Are its lifestyle choices, its actual strategies, really helping it reach its long-term health goals? Because if the mind is foggy, the rest of the body just can't work properly. So how do you check a company's mental clarity? Well, you follow these 5 steps. First, you just listen. What does the company say its vision is? Then you really kick the tires on it. Is this vision even realistic? Is it exciting enough to get customers and employees on board? And this is the big one. Does the day-to-day strategy actually support that vision? And can it pivot when, the world changes overnight?
Now, this is where it gets really practical. You can actually score a vision. It's not just fluff. Here we've got a company benchmarking itself against its rivals. See how our company's vision is really attractive and reliable, but maybe only so-so on the feasibility scale? Now look at competitor 2. Their vision is super attractive, but the feasibility is low. That is a massive red flag. It's basically a corporate pipe dream.
Okay, next up is the physical exam. We're moving from the mind down to the body itself. We're looking at all the different business units that make up the whole company. Are all its organs working together, or is one of them secretly poisoning the whole system? This donut chart is basically the company's anatomy. We can see right away that business A is the biggest organ, holding 40% of the assets. Business C and D are much smaller. This gives us a map of where the company has placed its biggest bets. But are they the right bets? To figure that out, we use some pretty simple but powerful logic. Look, if a business unit is in a hot, growing market and it's already a strong player, you double down, you invest to grow it. But what if it's in a dying market where you're not very good anyway? Well, then you have to make a tough call. You either squeeze it for cash, stop feeding it resources, or you just sell it off. It's all about making clear-eyed choices. So we've checked the organs, now it's time to test the muscles and reflexes. What is this company uniquely, amazingly good at? These are its core competencies. This is the special sauce, the unique skill that gives it a real edge over everyone else. And to find those skills, we need a map. That map is called the value chain. It's really just a simple breakdown of every single step a company takes to create something a customer actually wants to buy, from the very beginning to the very end. I mean, look at the primary activities here. It's pretty straightforward. You buy stuff, you make stuff, you sell stuff, and you take care of the customer. Every single company does this. But the great companies, they are absolutely world-class at 1 or 2 of these steps, and that's where they build their entire advantage. But that brings up a huge question, doesn't it? You just can't be the best at everything. It's impossible. So with all these different activities, from logistics to marketing, where on earth should a company focus its limited time, money, and talent to get the biggest bang for its buck? And the answer is actually not what most people think. The rule is this. You focus on the activities that are absolutely crucial for success in your industry, but, and this is the key part, you prioritize the ones where your company is currently weak. Think about it. You get way more benefit from fixing a critical weakness than from making something you're already great at just a little bit better. All right, we've checked the mind, we've examined the body. Now it's time for the blood work, the financial analysis. See, the numbers don't have opinions. They don't lie. They tell you the cold, hard, objective truth about what is really going on inside this company. And one of the most important vital signs in this blood test is something called economic value added, or EVA. You see, just making a profit can be really misleading. EVA gives you the real story because it measures your profit after you subtract the cost of all the capital you had to use to make that profit. It's like, it's not enough to make money. You have to make more money than the rent you paid on your factories, your inventory, and your investors' cash to get there. And wow, this chart just shows you how powerful EVA is. It's crystal clear. Business A and B are healthy. They're creating a combined $70 million in real true economic value. But then, look at business C. It's not just underperforming, it is actively destroying $15 million of value. That's not a sick patient. That's a financial cancer. The company is literally weaker because this unit exists. Okay, the results are in. We've got the brain scan, the physical exam, the muscle test, and the blood work. Now it's time for the most important part, the final diagnosis. This is where we connect all the dots and write a prescription to get healthy. See, a really good diagnosis connects the symptoms. For instance, the analysis might show that a fuzzy vision, that's the mental problem, is the reason the company keeps pouring money into a business unit that's destroying value. That's the financial problem. So the prescription writes itself. Sell off that value-destroying unit and reinvest that cash into fixing a key weakness in one of your star businesses. And really, that's the whole point of this exercise. It's not about just pointing out what's wrong today. It's about using that diagnosis to build a real, actionable plan for long-term, sustainable health. It's about creating wellness, not just treating sickness. So now you have the toolkit. You can look at pretty much any company out there and start asking these same sharp questions about its mind, its body, its muscles, and its blood work. It's a seriously powerful way to understand the business world. So my question to you is, now that you're the doctor, which company are you putting on the examination table first?